Welcome to our deep dive into trading.
Yeah.
We've got 5 books here, ready to really uncover what it takes to be successful.
Yeah.
Not just like the mechanics of trading, but
Right.
like the mindset.
Yeah.
From candlestick patterns to the psychology of risk.
Absolutely. And what's interesting is that we often think of trading, it's all charts and numbers.
Right.
But, looking at these books with titles like, Trading in the Zone.
Yeah. Price action trading secrets.
Price action trading secrets.
Yeah.
That there's a big element of mastering your mind.
Oh, absolutely.
Just as much as, mastering technical analysis.
Yeah. Okay, so let's not just scratch the surface here.
Right.
Let's dive deep.
Let's do it.
We'll start with how to make money trading with candlesticks.
Good.
Now, I've heard of candlestick patterns,
Yeah.
but to be honest, they've always seemed like a secret code to me.
Right.
What is the real value in understanding these patterns?
Well, think of candlestick patterns as a visual language that reflects what's going on between buyers and sellers in the market.
Okay.
So each candlestick on a chart is kind of like a story
Okay.
about price movements over a specific period.
Yeah.
And by learning to read these stories, you can start to gain insights into, market sentiment,
Okay.
potential turning points.
Yeah.
And I always say it's not necessarily about predicting the future.
Right?
It's about understanding the forces that are at play.
Yeah. So rather than seeing just like random ups and downs, I can start to see patterns that tell me something about what's happening.
Yeah.
About the psychology of the market.
Yeah, the psychology.
Yeah.
Exactly.
That's pretty cool.
Yeah.
The book mentions hammers and
Uh-huh.
engulfing patterns.
Yeah.
Are these the kind of clues that we should be looking for?
Yeah, exactly.
Yeah.
So let's say you're looking at a downtrend
Yeah.
and you see a hammer pattern emerge.
Yeah.
Now think of, hammer hitting a nail. It's a sign of strong buying pressure,
Okay.
really pushing against that downward momentum.
Gotcha.
And it suggests that the sellers might be losing their grip,
Okay.
and we could be seeing a reversal.
Ah, so that's what they mean by reversal signal.
That's a potential reversal signal. Yeah.
Okay. And what about these engulfing patterns?
Engulfing patterns.
Do they signal something bigger?
Yeah. So imagine one candle completely swallowing the previous one,
Okay.
right? That's an engulfing pattern.
Okay.
And it often indicates a significant shift in momentum.
Okay.
So if a bullish candle engulfs a bearish one,
Yeah.
it suggests that the buyers are taking control,
Okay.
and vice versa.
Oh, okay. Gotcha. Now, alongside these candlestick patterns, I see
Yeah.
all this talk about technical indicators.
Right.
Things like moving averages, RSI.
Yeah.
What role do these play in the bigger picture?
So I see candlestick patterns as giving you that, that snapshot of sentiment, but they don't necessarily tell the whole story.
Yeah.
Technical indicators I think of as like filters.
Okay.
They help to confirm trends,
Okay.
help you avoid getting fooled by, temporary fluctuations.
Okay.
So for instance, like a moving average, it'll smooth out price data,
Yeah.
gives you a clearer view of the overall trend direction.
Gotcha.
RSI measures the strength of price movements
Right.
and can kind of alert you to overbought or oversold conditions,
Okay.
which again can signal potential reversals.
So it's like having multiple tools in my toolkit. I can use candlestick patterns to see the immediate sentiment,
Yeah.
and then technical indicators to validate
yes.
those signals
Yeah.
and help me spot potential turning points.
Absolutely.
Got it. Okay, now trading in the zone, though,
Right.
it delves into something we've kind of already touched on,
Yeah.
which is that psychological aspect of trading.
The mental game.
Yeah.
The book makes a bold claim. Trading success relies more on mastering your mind
Yeah.
than mastering technical analysis.
Yeah.
Why is that?
Because charts and indicators, they provide information,
Right.
but they don't make decisions.
True.
It's your mindset,
Yeah.
your ability to control emotions,
Yeah.
stick to a plan. That's what ultimately determines your success
Right.
or failure as a trader.
Okay, so then what are some of those mental traps
Right.
that even experienced traders can fall into?
Right.
What do I need to be aware of to avoid making costly mistakes?
But, I think fear and greed, they're the two most powerful emotions
Right.
that can sabotage traders.
Yeah.
Fear can paralyze you.
Yeah.
It can prevent you from taking well-calculated risks.
Yeah.
Greed
Mm.
can make you chase unrealistic profits
Oh, yeah.
and lead you to make impulsive decisions.
Right.
And really ignore risk management rules.
I can see how those emotions would get amplified in an environment like the stock market,
Absolutely.
where prices are constantly moving.
Right.
You mentioned risk management.
Yeah.
It seems like this is a key theme across all these books.
It really is.
Is that right?
Absolutely.
Okay.
Risk management is, it's not just about avoiding losses.
Yeah.
It's about protecting your capital.
Okay.
So you can stay in the game long enough
Right.
to let your trading edge
Right.
play out, your strategy play out.
So it's not just about making the winning trades, it's making sure the losing trades
Yeah.
don't wipe you out.
Don't wipe you out. Exactly.
Okay. I'm starting to see how these pieces connect.
Yeah.
Now let's move on to Price Action Trading Secrets by Rayner.
Okay.
What's the secret sauce in this one?
So this book focuses on the idea that the price chart itself tells a story.
Okay.
You don't need fancy indicators
Yeah.
to understand it.
Okay.
It's about recognizing patterns
Okay.
in those price movements, identifying support and resistance levels,
Okay.
and really understanding the underlying forces that are driving the market.
Okay, now support and resistance. Are those like the battle lines on the chart?
Yeah, you can think about it that way.
Where buyers and sellers are clashing.
So support's a price level
Yeah.
where buying pressure tends to outweigh selling pressure
Okay.
and prevents the price from falling further.
Okay.
Resistance, kind of the opposite,
Oh, okay.
right? Where selling pressure is stronger,
Okay.
making it harder for the price to break through.
So if I'm seeing the price bouncing off a support level multiple times,
Yeah.
it's a sign that buyers are stepping in.
Buyers are stepping in,
Mm.
potentially a good place to consider buying yourself.
Oh, okay.
But of course, trading's never that simple.
Right, right.
But understanding support and resistance,
Yeah.
a crucial step in reading the price action story.
Okay, so Trading Chart Patterns by Akash takes that concept even further.
Takes it a step further.
Yeah, by exploring recurring patterns that can signal
Right.
reversals or continuations.
Right, exactly.
So we're talking about head or shoulders,
Head and shoulders,
double top.
flags.
Yep.
Yep, all that stuff.
Exactly.
What makes these patterns so valuable to traders?
So I think that these patterns, they reflect shifts in market psychology
Okay.
and often precede major price movements.
Okay.
So for example, like a head and shoulders pattern
Yeah.
where the price, it forms a peak.
Yeah.
That's the head.
Yeah.
And then two lower picks on either side. The shoulders
Yeah.
often signals that an uptrend is running out of steam,
Okay.
losing momentum. A
Okay.
reversal might be coming.
So I see how recognizing these patterns would be like, I don't know, having a sneak peek
Yeah.
into the future.
Yeah, it's not about knowing for certain.
Right, right. But
It's about having a higher probability.
of being right. Okay.
Exactly.
Now, speaking of exciting moves,
Yeah.
How to Make Money with Breakout Trading
Right.
by Indrajitz shantnaraz.
Right.
Sounds like a book about capturing these explosive price surges.
Yeah. Breakout trading is all about identifying those moments when a stock or other asset breaks out of a period of consolidation.
Okay.
You can think of it like a coiled spring suddenly releasing energy,
Okay.
right?
Yeah.
These breakouts can lead to really rapid price movements,
Yeah.
offering the potential for significant profits.
It sounds a bit like, I don't know, catching a wave as a surfer.
Yeah,
You wait for that right moment,
right.
and then you ride the momentum.
Yeah,
But it also seems high risk.
right. You're right. Breakouts can be powerful,
Yeah.
but they can also be false alarms.
Right.
And that's why risk management is so important in breakout trading.
Oh, okay.
You need to have a plan
Yeah.
for entry and exit.
And most importantly, for limiting your losses if it doesn't work out.
So before I think about chasing those breakouts,
That's right.
I need to know how to protect myself
Right.
if the market doesn't move the way I expect.
Exactly.
Risk management is the common thread that ties all this together.
Absolutely. No matter how good your analysis is or
Yeah.
your strategy, unexpected events can and do happen in the market.
Right.
Risk management is your safety net
Okay.
that allows you to weather those storms and stay in the game for the long run.
Gotcha. Okay.
Yeah.
That makes sense.
Yeah.
So we've kind of laid the groundwork here, exploring candlestick patterns, technical indicators, the crucial role of risk management.
Right.
But I'm eager to see how these concepts play out in real-world trading. Do we
Sure.
dive into some specific examples from the books?
Yeah, absolutely. So Trading Chart Patterns has got some compelling examples
Okay.
of how these patterns can signal major market moves.
Okay.
One that stands out to me is the head and shoulders
Yeah.
pattern
Yeah. Yeah.
forming on the daily chart of a major stock index.
Okay.
So the market had been rallying for months,
Yeah.
but as that momentum waned,
Right.
this pattern emerged, signaling a potential trend reversal.
So the head formed at the peak of the rally,
Right.
and the two shoulders on either side represented weaker attempts to push higher.
Exactly.
Okay.
And what's fascinating is that this pattern really reflects a shift in market psychology.
Okay.
Right?
Okay.
As the rally reached its peak,
Yeah.
more and more traders started taking profits,
Right.
creating selling pressure that prevented the price from making new highs.
Okay.
And those two shoulders, they represented attempts by the bulls to regain control,
Right.
but they failed, indicating that the bears were kind of gaining dominance.
And then the breakdown below the neckline, the
Yes.
line connecting those two shoulders,
Right.
confirmed that bearish reversal.
That breakdown signaled that the selling pressure had finally overcome the buying pressure,
Yeah.
triggering a new downtrend.
Wow.
So traders who recognized this pattern early on could have potentially avoided significant losses
Yeah.
or even profited from the decline.
It's amazing to see how this seemingly simple pattern on a chart
Right.
can reflect this huge shift in the balance power
Right.
between buyers and sellers.
Yeah.
Now, let's shift gears to how to make money with breakout trading,
Okay.
which focuses on capturing those explosive price movements.
Right.
Any specific examples from that book that come to mind?
Yeah. One that comes to mind involves a breakout from a symmetrical triangle pattern
Okay.
on the hourly chart of a popular tech stock.
Okay.
So the stock had been trading within this narrowing range, forming a triangle shape
Yeah.
as the highs and lows converged.
Okay.
So this consolidation period
Yeah.
represented a buildup of energy, almost like that coiled spring,
Right. Right. Okay.
waiting to be released.
So the converging trend lines of the triangle acted like a pressure cooker, kind of squeezing the price
Yeah.
until it finally broke out.
Exactly. And when that breakout occurred, it was accompanied by a surge in volume,
Okay.
which confirmed that there was strong conviction behind the move.
Okay.
So traders who recognized this pattern and saw the volume spike, they could have jumped on board and ridden that wave of the breakout.
But as we discussed earlier, breakouts can be risky.
Right.
How do we know which ones are likely to succeed and which ones are false alarms?
Well, that's where understanding market context and risk management come into play.
Okay.
Not all breakouts are created equal.
Right.
Some occur within strong uptrends,
Yeah.
while others happen in weak or choppy markets.
Okay. Okay.
Breakouts accompanied by strong volume
Yeah.
and positive news flow
Okay.
are generally more reliable than those that occur on low volume or negative news.
So it's not just about spotting the pattern. It's about assessing the overall market environment and the strength of the breakout itself.
Exactly.
And of course, having a solid risk management plan in place.
Absolutely. Breakout trading, like any other trading strategy, requires discipline
Yep.
and a clear understanding of the risks involved.
Right.
Before entering any breakout trade, it's essential to define your entry and exit points. Set profit targets, and most importantly, have those stop loss orders in place
Right. Right.
to protect your capital if the trade doesn't go as planned.
Okay. Okay. It sounds like risk management is kind of the anchor
Yeah.
that keeps us grounded no matter how exciting the trading opportunities might seem.
I like that analogy, yeah.
Now, throughout our deep dive, one book has consistently emphasized that psychological side of trading,
Right.
trading in the zone. Can we delve into some of the key insights from that book?
Yeah, absolutely. So trading in the zone argues that successful trading is less about having the perfect system and more about developing the right mindset. One of the most powerful concepts it introduces is the idea of viewing trading as a probability game.
Okay.
It's not about being right or wrong
Right.
on every trade.
Yeah.
It's about having a system that gives you a statistical edge over a series of trades.
So even the best traders are going to have losing trades.
Absolutely. The book uses a powerful analogy of a casino.
Okay.
Casinos, they understand that they'll have winning streaks and losing streaks,
Yeah.
but they're always in control because they have the edge in the long run.
Right.
They know over time the odds are in their favor.
So as traders, we need to develop that same long-term perspective.
Yeah.
We need to have a trading plan,
Right.
a system that we trust,
Right.
and execute that plan with discipline,
Yeah.
knowing that those results will play out over time.
Exactly. The book emphasizes the importance of developing what they call a trading edge.
Okay.
A system that gives you that statistical advantage.
Right.
Now, this edge might come from your ability to identify high probability setups, your risk management strategy,
Right.
or your emotional discipline.
And just as important as having that edge is having the mental fortitude to stick to your plan.
Right.
Even when the market is throwing those curveballs.
Right. That's where emotional discipline comes in.
Yeah.
So the book delves into those common psychological traps that sabotage traders. We're talking about fear, greed, overconfidence, revenge trading.
Right.
And it provides strategies for recognizing these traps and developing the mental toughness to overcome them.
It sounds like Trading in the Zone is almost like a self-help book for traders, helping them develop that mental resilience and emotional control needed to succeed.
Yeah, that's a great way to put it.
Okay.
The book emphasizes the importance of self-awareness, recognizing your strengths and weaknesses, and developing a trading style that aligns with your personality and risk tolerance.
Now let's circle back to candlestick patterns for a moment.
Okay.
We touched on them briefly earlier.
Right.
But how to make money with trading with candlesticks delves much deeper into those nuances of these patterns.
Yeah.
What are some of the key takeaways from that one?
Well, this book is a treasure trove of candlestick wisdom.
Okay.
It not only explains the individual patterns, but it also explores how to combine them to form more complex signals.
Okay.
So, for example, we talked about the hammer pattern at the bottom of a downtrend.
Right.
As a potential bullish reversal signal.
Yeah.
But if the next candle after that hammer is a strong bullish candle that completely engulfs the hammer, it forms what's called a bullish engulfing pattern.
Okay.
Reinforcing that bullish signal.
So by combining those two patterns,
Right.
we have even stronger evidence that that downtrend might be reversing.
Exactly. And the book goes on to explore dozens of other candlestick combinations, each providing valuable insights into, market psychology and potential turning points. It's like learning a new language.
Yeah.
The language of candlesticks.
Right.
Which can help us decipher those whispers and shouts of the market.
I'm starting to see how mastering these patterns can be like having this extra layer of insight into the market's movements.
Yeah.
But what happens when these patterns conflict with other technical indicators?
Right.
How do we make sense of that?
That's a great question. And it happens all the time in trading.
Right.
No indicator or pattern is perfect. They're simply tools to help us interpret market data. When you encounter conflicting signals, it's essential to consider the overall market context.
Okay.
The strength of the trend, the volume, and any relevant news or events that might be influencing price action.
So it's not about blindly following these signals. It's about using them as pieces of a puzzle to get that holistic view.
Exactly. Yeah. Trading is both an art and a science.
Yeah.
It requires analytical skills and intuitive judgment. Sometimes you have to trust your gut.
Yeah.
But that gut feeling should be based on experience and a deep understanding of market dynamics.
Okay. Now, price action trading secrets
Right.
also delves into the subtleties of chart reading,
Right.
but from a slightly different perspective.
Yeah.
What sets this one apart?
So this book emphasizes the importance of understanding market structure,
Okay.
identifying trends, recognizing key support and resistance levels.
Right.
It's about seeing the big picture, not just focusing on the individual candlesticks or patterns, but understanding the broader context of those price movements.
So it's about connecting the dots, seeing how those individual price swings fit into the larger narrative of the market's trend.
Exactly. One of the key concepts in the book is identifying what we call swing highs and swing lows. Those peaks and valleys on the chart that mark those turning points in price action.
Yeah.
By connecting those swing highs and swing lows with trend lines, we can get a clearer picture of the prevailing trend.
So an uptrend would be characterized by higher highs and higher lows.
Right.
While a downtrend would show lower highs and lower lows.
Precisely.
Yep.
And once we've identified the trend, we can look for trading opportunities that align with that trend.
Okay.
So for example, in an uptrend, we might look for buying opportunities near support levels, anticipating that the price will bounce higher.
And in a downtrend, we might look for selling opportunities
Yeah.
near resistance levels,
Right.
expecting the price to pull back lower.
Exactly. It's about working with the market's momentum rather than fighting against it.
Okay, so Price Action Trading Secrets also discusses various trading strategies, including trend following,
Right.
breakout trading, pullback trading.
Yeah.
Each of these strategies offers a different approach
Right.
to exploiting those market opportunities.
Yeah.
And the best one for me or for anyone is going to depend on personality, risk tolerance,
Right.
trading goals.
Absolutely.
It sounds like Price Action Trading Secrets provides a framework for understanding the market structure
Right.
and then choosing the strategies
Right.
that best fit the individual's trading style.
Exactly.
But no matter which strategy you choose,
Right.
risk management remains paramount.
Absolutely. All these books
Yeah.
really emphasize that successful trading is a process,
Right.
not a get-rich-quick scheme.
Okay.
It requires patience, discipline,
Right.
and a commitment to continuous learning.
And finding that balance between the analytical
Right.
and the intuitive,
Yeah.
between reading the charts
Right.
and reading the psychology of the market.
Precisely.
Yeah.
So as we wrap up this part of our deep dive,
Yeah.
I want to emphasize that these books are really just the starting point. Trading is a journey of continuous learning and self-discovery.
Okay.
The more we learn,
Yeah.
the more we realize how much more there is to learn.
Okay, so are you ready for the final leg of our journey here?
I am.
Where we synthesize what we've learned and leave our listener with some thought-provoking questions
Right.
to guide their own exploration of the markets.
Let's do it.
We've journeyed through the technical aspects of trading, deciphering candlestick patterns, understanding breakout strategies.
Right.
But one resounding theme throughout our deep dive here has been that crucial role of mindset.
Right. It's not just about knowing the tools.
Right.
It's about having the mental discipline to use them effectively.
What's fascinating is how all 5 books, while focusing on different aspects of trading, emphasize this idea of mastering your emotions.
Yeah.
Trading in the zone. Especially dives deep into the psychological traps that can sabotage even experienced traders.
Yeah, but
We're talking about fear, greed, overconfidence,
right.
those emotional impulses that can lead us to make rash decisions.
Right.
Ignore our trading plan.
Yeah, and one of the most powerful insights, I think, from trading in the zone is the idea that the market doesn't care about your opinions or your emotions.
Okay.
It just simply reflects the collective actions of millions of participants, each driven by their own motivations and perceptions.
Okay.
So trying to impose your will on the market, hoping it'll move in the direction you desire, is a recipe for frustration and losses.
So it's not about trying to predict the future or outsmart everybody else. It's about accepting that the market has its own rhythm, its own logic.
Yeah.
And our job as traders is to try to understand that and adapt to it.
Exactly. And that kind of leads back to this idea of developing a trading edge.
Right.
A system or strategy that gives you that statistical advantage over a series of trades.
Right. So this edge might come from my ability to identify high probability setups.
Right.
My risk management strategy.
It could be.
Or my emotional discipline.
It could be, yeah.
I can see how having a clear trading plan, a system that I trust, would provide that sense of stability and control.
It can, absolutely.
In an otherwise chaotic environment.
When you have a plan, you're less likely to react emotionally to every market fluctuation.
Yeah.
You can stick to your strategy knowing you've done your homework and you're playing the odds in your favor.
One of the books, I think it was How to Make Money with Breakout Trading, used an analogy that really resonated with me.
Oh, okay.
The surfer waiting for the perfect wave.
Yeah. The surfer doesn't just jump on any ripple that comes along.
Right.
They wait patiently, observing the patterns, feeling the energy of the ocean until they spot a wave that meets their criteria.
Okay.
The right size, the right shape, the right direction.
And only then do they commit, riding that wave with confidence and skill.
Yeah.
It's a beautiful analogy for trading.
It is.
Yeah.
We need to have that same patience and discernment in the market. We need to wait for those high probability setups that align with our trading plan.
Right.
And when they appear, we execute with confidence, knowing we've prepared for this moment.
All this talk about discipline and emotional control, it sounds almost superhuman.
Right.
how can the average person develop this kind of mental toughness?
Well, it's not about becoming an emotionless robot.
Right.
It's about recognizing your emotional triggers.
Okay.
Those situations or market conditions that tend to make you anxious,
Right.
greedy, or fearful.
Yeah.
And once you're aware of those triggers,
Right.
you can develop strategies to manage them.
So that could involve things like journaling my trades.
It could be journaling, practicing mindfulness,
Right.
or just simply taking a break from the market when you're feeling overwhelmed.
Okay, so trading in the zone really emphasizes this idea of viewing trading as a probability game.
Right.
It's not about being right or wrong on every trade.
Right.
It's about having a system that gives you a positive expectancy over a series of trades.
That's a crucial mindset shift.
Yeah.
If you approach trading with the expectation of winning every time, you're setting yourself up for disappointment and frustration.
Right, of course.
And those negative emotions can lead to things like revenge trading, chasing losses, ultimately damaging your account.
It's about accepting that losses are inevitable. And focusing on managing our risk. So we can stay in the game long enough to let our edge play out.
Precisely. Remember that casino analogy?
Yeah.
Casinos, they don't win every bet, but they win consistently over time. Because they have the odds in their favor. As traders, we need to develop that same long-term perspective and focus on managing our risk so that we can weather those inevitable losing streaks and come out ahead in the long run.
As we bring this deep dive to a close, I want to leave our listener with a final thought-provoking question here.
Okay.
Knowing that trading success relies on both technical skills and emotional discipline, what one personal trait do you think would be most crucial to develop to become a consistently profitable trader?
That's a great question. You know, there's so many important traits: discipline, patience, resilience. But if I had to choose just one, I would say self-awareness.
Okay.
The ability to honestly assess your strengths and weaknesses, recognize your emotional biases, and adapt your trading approach accordingly is essential for long-term success.
Self-awareness allows us to stay grounded, avoid chasing illusions, make rational decisions even when the market is testing our limits.
Exactly. It's a journey of continuous learning, self-discovery, and adaptation. And that's what makes trading so fascinating. It's a constant challenge, a constant pursuit of knowledge and mastery.
So to our listener, we encourage you to reflect on this question. What steps can you take to cultivate greater self-awareness in your own trading journey? We hope this deep dive has provided you with valuable insights, a solid foundation to build upon as you explore this world of trading.
Remember, trading is a marathon, not a sprint. Be patient, be disciplined, and never stop learning.
The rewards are well worth the effort.
Absolutely.